You want to know what kills more traders than anything else? It's not the market. It's not bad luck. It's not even stupidity, though Lord knows there's plenty of that to go around. No, what destroys most men in this game is the one thing they've been taught their entire lives to worship: hard work. I'm here to tell you something that'll probably make you uncomfortable, something that goes against everything your father, your teachers, and every motivational speaker has ever told you. Sometimes, effort is your enemy. Sometimes, trying harder is exactly what's bleeding your account dry. You see, from the time you were old enough to walk, they fed you this lie. Work hard, they said. Put in the hours. Grind it out. No pain. No gain. And you know what? That advice works beautifully if you're digging ditches or building railroads. But this market doesn't care about your sweat. It doesn't reward you for effort. It only rewards you for being right. And here's the cruel joke: the harder you try, the wronger you usually get. I learned this lesson the hard way, back when I was just a kid in the bucket shops of Boston. I thought I was smart. I thought I could outwork everyone. I'd stay up all night studying price patterns, analyzing every tick, every movement. I was obsessed. I was dedicated. I was industrious. And I was broke more often than I care to remember. The market has a peculiar way of punishing the ambitious, the energetic, the doers, because trading isn't about doing, it's about being. It's about positioning yourself correctly and then having the discipline to do absolutely nothing while the market does the work. But that's torture for most people. Doing nothing feels like laziness. It feels like you're not earning your profits. So what do? You trade. You overtrade. You turn a winning position into a losing one simply because you couldn't sit still. I've watched it happen thousands of times. A man enters a position, a good position, mind you, one that's perfectly aligned with the market's direction. Then what does he do? He starts working. He checks it every 5 minutes. He reads every news report. He listens to every opinion. He convinces himself he needs to do something, needs to manage it, needs to improve it. And before you know it, he's out of the position just before it makes the major move he was waiting for. Or worse, he's added to it at exactly the wrong time, turning a winner into a loser. The effort killed him, not the lack of analysis, not the absence of a plan. The effort itself became the weapon that destroyed his account. Now, I can already hear some of you thinking, but Jesse, you've got to work hard to succeed. You've got to put in the time, and you're not entirely wrong. But here's what you're missing. There's a world of difference between the right kind of work and the wrong kind. There's preparation, and then there's interference. There's study, and then there's anxiety disguised as diligence. Before you ever put $1 into the market, yes, you should work. Work hard. Study the patterns. Understand the mechanics. Learn to read the tape. Build your framework. But once you're in, once that position is on, your job is to become a statue. Your job is to do nothing unless the market tells you to do something. But we can't do that, can we? Because we've been conditioned to believe that idle hands are the devil's workshop. We've been trained to think that if we're not busy, we're not working. And if we're not working, we don't deserve success. So we sabotage ourselves with activity. We confuse motion with progress. We mistake busyness for effectiveness. I remember one particular trade must have been around 1907, right before the panic. I was short the market, heavily short, and I was right, dead right. The market was going to collapse, and I knew it in my bones. But those weeks leading up to the crash, they were agony. Every day the market would rally a little, and I'd feel that itch. That voice in my head saying, do something, cover some, protect yourself. You're working too hard to lose it all. But I didn't. You know why? Because I'd learned by then that the hardest work in trading is the work of doing nothing. It's the work of sitting on your hands while your account fluctuates. It's the work of ignoring the noise, the opinions, the fear. It's the work of trusting your analysis more than your anxiety. When that crash came, I made over $1 million. Not because I worked harder than everyone else during those weeks, but because I worked harder at controlling myself, at resisting the urge to act, at having the patience to let the market come to me. You want to talk about psychological price? I covered that in another piece, how this game extracts a toll from your mind and spirit. But what I didn't tell you then, what I'm telling you now, is that most of that psychological damage is self-inflicted. We torture ourselves with unnecessary effort. We create stress through meaningless activity. We manufacture anxiety by staying busy when we should be still. The amateur thinks trading is about finding opportunities. The professional knows trading is about waiting for opportunities. And there's a universe of difference between those two positions. One is active, frantic, exhausting. The other is patient, selective, powerful. Think about a lion hunting on the savannah. Does he chase every gazelle he sees? Does he sprint around all day working hard, showing everyone how dedicated he is? No. He lies in the grass. He waits. He conserves his energy. And when the right opportunity presents itself, when that one particular gazelle makes that one particular mistake, he strikes with overwhelming force. One attack, one kill. Then, back to resting. But you're out there chasing every gazelle on the plain. You're exhausting yourself with effort. You're confusing activity with productivity. And at the end of the day, you're starving despite all that hard work. The market doesn't reward effort. It rewards precision. It rewards timing. It rewards patience. All the hard work in the world won't turn a bad trade into a good one. All the analysis and adjustment and management won't change the fundamental reality that you entered at the wrong time or in the wrong direction. I've seen traders, smart traders, educated traders drive themselves into the ground with effort. They'll trade 20, 30 times a day. They'll tell you they're working their edge or staying active in the market. But what they're really doing is paying commission after commission, making mistake after mistake, all because they've convinced themselves that success requires constant action. And the brokers? Oh, they love these people. They encourage this madness. Active trader programs, they call it. Special tools for serious traders who execute hundreds of trades a month. It's like selling shovels to men digging their own graves and calling it customer service. The truth, the hard, uncomfortable truth, is that most traders would make more money if they traded less, if they worked less, if they stopped trying so damn hard and started thinking more clearly. I've spoken before about how traders sabotage their own success, and this might be the biggest way they do it. They work themselves right out of profitability. You know what the biggest winners of my career have in common? I barely touched them. I put them on, I let them run, and I did nothing but watch. The biggest losers? Those were the ones I worked on, the ones I managed, the ones I tried to improve with my constant attention and adjustment. The market is not your employee. It doesn't work harder because you do. It doesn't reward your dedication with loyalty. It moves based on forces far larger than your individual effort, and all your activity is just noise in the face of those forces. Your job is not to push the market where you want it to go. Your job is to identify where it's already going and position yourself accordingly. Then, and this is the part nobody wants to hear you wait. Waiting is work. Patience is work. Discipline is work. But it doesn't feel like work because you're not doing anything visible. You're not busy. You're not active. And in our culture, that looks like laziness. But I'm telling you, as a man who's been on both sides of this game more times than I can count, the ability to do nothing is the hardest skill you'll ever develop, and it's the most valuable. Now let me tell you something else that'll twist your mind around. The harder you work at trading, the more you disconnect from what actually makes money in this business. You become so focused on the mechanics, on the doing, that you lose sight of the seeing. And trading, at its core, is about seeing clearly. I've talked before about how trading is a waiting game, about how patience is your real edge. But what I didn't fully explain is why that patience is so difficult to maintain. It's because patience feels passive. It feels like you're not working. And when you're not working, your mind starts to betray you. It starts whispering doubts. Maybe you missed something. Maybe you should check again. Maybe you should adjust the stop. Maybe you should take profits now before they disappear. That voice, that insidious little voice, is the sound of effort trying to kill your profits. Here's what happens in the mind of a trader who's trying too hard. He puts on a position based on solid analysis. The setup is good. The timing is right. Everything aligns. But then the work begins. Not the work of managing the trade, the work of managing his anxiety. He starts refreshing his screen. He starts reading every news headline. He starts asking himself questions that have no answers. What if I'm wrong? What if this is the time it doesn't work? What if I should have waited one more day? And each of these thoughts, each of these questions is an invitation to act, to do something, to work. And eventually he accepts that invitation. He exits too early, or he adds to a loser, or he moves his stop, and what was once a perfectly good trade becomes a casualty of excessive effort. The cruel irony is that he thinks he's being disciplined. He thinks he's being professional. He's monitoring his risk, he tells himself. He's staying on top of things. But what he's actually doing is allowing his need to feel productive to override his strategy. He's letting his work ethic destroy his edge. I learned this lesson in a very specific way back in 1915. I had gotten back into the market after one of my bankruptcies. Yes, I had several. Don't let anyone tell you I was always on top. I was trading cotton, and I'd developed a system, a good system. It had rules, it had structure, and when I followed it, it made money. Beautiful, consistent money. But then I made a mistake. I started improving it. I started working on it. Maybe if I add this indicator, I thought, maybe if I tighten these rules, maybe if I create more conditions, I'll be even more successful. I was so proud of myself. Look at me, I thought. I'm not lazy. I'm not resting on my laurels. I'm working to get better. You know what happened? My returns went to hell. Not because the market changed. Not because my original system was flawed. But because I had worked so hard at improving something that didn't need improvement that I destroyed what made it work in the first place. I had optimized the life right out of it. The system worked because it was simple. It worked because it gave me clear signals and then demanded I do nothing until the next signal. But I couldn't accept that. My ego needed to believe that my constant effort was adding value. So I added complexity. I added work. And I added failure. This is what I mean when I say effort can hurt you. There's a point where additional effort doesn't add value, it subtracts it. There's a point where trying harder makes you worse, not better. And most traders never recognize when they've crossed that line because they're too busy congratulating themselves for being so dedicated. You want to know what separates the successful traders from the failures? It's not intelligence. Lord knows I've seen brilliant men go broke in this business. It's not education. Some of the worst traders I've known had degrees from the finest universities. It's not even capital, though that certainly helps. No, what separates success from failure in this game is the ability to recognize when effort helps and when it hurts. Before you put on a trade, effort helps. Study the market. Understand the context. Know what you're betting on and why. Prepare your plan. Define your risk. Do all that work up front. Be thorough. Be detailed. Be obsessive if you want. That kind of effort pays dividends. But once that trade is on, once you've pulled the trigger, any additional effort beyond following your predetermined plan is probably going to hurt you. Because that effort is no longer about improving the trade, it's about managing your emotions. And emotions, my friend, have killed more traders than every market crash combined. The market doesn't move because you're watching it. Your stock doesn't go up because you're checking it every 5 minutes. Your position doesn't become safer because you're worrying about it. All that effort, all that mental and emotional energy is being completely wasted. Worse than wasted. It's actively working against you by keeping you in a state of stress and anxiety that clouds your judgment. I remember sitting in my office during the 1929 crash. I was short, heavily short, and I was making money hand over fist as the market imploded. But you know what I wasn't doing? I wasn't checking my positions every minute. I wasn't reading every panic headline. I wasn't calculating my profits in real time. I was sitting there, calmly, doing virtually nothing. And people would come into my office, frantic, asking me how I could be so calm. How could I just sit there while fortunes were being made and lost? Didn't I need to do something? Didn't I need to manage my positions? No. I told them. I didn't, because I'd already done the work. I'd analyzed the market months before. I'd positioned myself correctly. I'd set my stops, mental stops. I didn't trust the brokers with orders during that chaos. And now my job was simple: wait for the market to finish what it had started. Any additional effort on my part would only be interference. This is what I mean when I talk about the psychological price of trading success. Part of that price is learning to be comfortable doing nothing. It's learning to resist the urge to work when work will only make things worse. It's learning to trust your analysis more than your anxiety. And let me tell you, that's a price most people simply won't pay, because doing nothing feels too much like giving up. But here's the distinction nobody teaches you. There's a difference between doing nothing and being nothing. When you're in a good position and you're not acting, you're not being passive, you're being powerful. You're demonstrating the kind of discipline and control that most traders never develop. You're doing the hardest work there is. You're controlling yourself. The amateur trader looks busy. He's got 6 screens. He's got news feeds running. He's got 50 indicators on his charts. He's in and out of positions all day long. He's working so hard, and at the end of the month, he's got nothing to show for it but stress and losses. The professional trader looks lazy. He's got 1 screen, maybe 2. He's got a handful of key metrics he monitors. He takes a few trades a week, maybe a few a month. He spends most of his time waiting, and at the end of the month he's extracted more money from the market than the amateur could dream of. Who's really working harder? The amateur is certainly more active, but the professional is doing the kind of work that actually matters. He's doing the work of patience, the work of discipline, the work of emotional control. And those kinds of work, the internal kinds, are infinitely more difficult and infinitely more valuable than the external busyness of the amateur. I've said before that traders unknowingly sabotage their own success, and this is perhaps the most common way they do it. They sabotage themselves by working too hard. They destroy good positions with unnecessary management. They exit winning trades because they can't handle the psychological discomfort of waiting. They take profits too early because taking action feels more comfortable than sitting still. And then they wonder why they can't get ahead. They look at their charts and their analysis and they think, I was right about the direction. I knew what was going to happen. So why didn't I make money? And the answer, more often than not, is because you couldn't leave it alone. Because you had to do something. Because your need to work, to be active, to feel productive, overrode your strategy. The market will give you exactly what you're positioned for, but only if you let it. Only if you can endure the wait. Only if you can resist the temptation to interfere with effort that adds no value. Your job is not to make the market move. Your job is to identify where it's moving and then get out of its way. This is why I keep coming back to this idea of patience as your real edge. It's not just about waiting for the right setup, though that's crucial. It's about having the discipline to do nothing once you're in that setup. It's about recognizing that sometimes the best action is inaction. It's about understanding that in trading, unlike in almost every other endeavor, trying harder can make you worse. Think about this. When you're lifting weights, more effort yields more results. When you're studying for an exam, more hours of preparation improve your chances. When you're building a business, more work generally leads to more growth. But trading? Trading punishes indiscriminate effort. It rewards specific, targeted action followed by disciplined inaction. And that's so counterintuitive to everything we've been taught that most people never adjust to it. They keep treating trading like it's a regular job where showing up and putting in the hours equals success. But this isn't a regular job. This is a game where the market pays you for being right and punishes you for being wrong, and no amount of effort can change which category you're in. Once you've made your decision and entered your position, the die is cast. All you can do now is wait to see if you were right. And all your additional effort does is increase the chances that you'll exit before you find out. So what do you do with this information? How do you operate in a world where the thing you've been taught to rely on hard work can actually be your downfall? Let me tell you how I finally figured it out, and maybe it'll save you a few of the bankruptcies I had to endure. The first thing you need to understand is that there are different kinds of work in trading, and only one of them makes you money. There's the work of preparation that's valuable. There's the work of analysis that's essential. There's the work of discipline that's priceless. And then there's the work of interference that's what destroys you. Your job is to learn to tell them apart. Preparation is everything you do before you put money at risk. It's studying the market's behavior. It's understanding the patterns that repeat. It's learning to read the tape, to feel the momentum, to sense when something genuine is happening versus when it's just noise. This kind of work is never wasted. Do as much of this as you can stomach. Read the histories, study the panics and the booms. Understand what came before so you can recognize it when it comes again. But here's the key. This work happens away from the market. You're not doing this with money on the line. You're doing this in the quiet hours, when there's no position to manage, no profit and loss swinging around to distract you. You're building your foundation, your framework, your understanding, and this work is cumulative. Every hour you spend here makes you better. Every pattern you internalize gives you an advantage. Then there's the work of analysis. This is where you take what you've learned and apply it to current conditions. You look at the market and ask, what is actually happening here? Not what do I want to happen? Not what should happen? Not what everyone says is happening? But what is the market itself telling me through its price action? This work requires brutal honesty. It requires you to set aside your ego, your hopes, your biases. It requires you to see what is, not what you wish to be. And this, too, is best done away from active positions. Because when you've got money on the line, your analysis gets contaminated by your fear and greed. You start seeing what you need to see rather than what's actually there. I used to do my best analysis on Sundays. The market was closed. There was no urgency. I could look at the charts and the data with a clear mind. I could ask myself the hard questions without the pressure of having to act immediately on the answers. And more often than not, the insights that made me the most money came during those quiet hours of preparation, not during the frantic moments of market hours. Then comes the work of discipline, and this is where most people fail. This is the work of following through on what your preparation and analysis have told you. It's the work of entering when your system says enter, even when you're scared. It's the work of exiting when your system says exit, even when you're hopeful. And most importantly, it's the work of doing nothing when your system says to wait. This kind of work is entirely internal. Nobody can see you doing it. There's no visible output. You're not producing anything. You're just controlling yourself. You're managing your impulses. You're resisting your urges. And this, my friend, is the hardest work you'll ever do, because the human mind doesn't want to follow systems. It wants to react. It wants to feel smart. It wants to be right every single time. And discipline is the constant battle against those wants. Now, let me tell you about the fourth kind of work, the kind that destroys accounts. It's the work of interference. This is when you start working on your trade after you've entered it. You start second-guessing your analysis. You start looking for reasons to exit early or add more or move your stop. You start checking it compulsively, reading every news item, asking for opinions. You're working so hard, you're so engaged, and you're sabotaging yourself with every minute of it. This interference comes from the same place that all destructive behavior in trading comes from, the inability to accept uncertainty. You can't stand not knowing whether you'll be right. You can't tolerate the discomfort of having money at risk with no way to control the outcome. So you work. You stay busy. You convince yourself that all this activity is productive, but it's not. It's just anxiety wearing the mask of diligence. So what do you do with this information? How do you operate in a world where the thing you've been taught to rely on hard work can actually be your downfall? Let me tell you how I finally figured it out, and maybe it'll save you a few of the bankruptcies I had to endure. The first thing you need to understand is that there are different kinds of work in trading, and only one of them makes you money. There's the work of preparation that's valuable. There's the work of analysis that's essential. There's the work of discipline that's priceless. And then there's the work of interference that's what destroys you. Your job is to learn to tell them apart. Preparation is everything you do before you put money at risk. It's studying the market's behavior. It's understanding the patterns that repeat. It's learning to read the tape, to feel the momentum, to sense when something genuine is happening versus when it's just noise. This kind of work is never wasted. Do as much of this as you can stomach. Read the histories, study the panics and the booms. Understand what came before so you can recognize it when it comes again. But here's the key. This work happens away from the market. You're not doing this with money on the line. You're doing this in the quiet hours, when there's no position to manage, no profit and loss swinging around to distract you. You're building your foundation, your framework, your understanding, and this work is cumulative. Every hour you spend here makes you better. Every pattern you internalize gives you an advantage. Then there's the work of analysis. This is where you take what you've learned and apply it to current conditions. You look at the market and ask, what is actually happening here? Not what do I want to happen, not what should happen, not what everyone says is happening, but what is the market itself telling me through its price action? This work requires brutal honesty. It requires you to set aside your ego, your hopes, your biases. It requires you to see what is, not what you wish to be. And this, too, is best done away from active positions, because when you've got money on the line, your analysis gets contaminated by your fear and greed. You start seeing what you need to see rather than what's actually there. I used to do my best analysis on Sundays. The market was closed. There was no urgency. I could look at the charts and the data with a clear mind. I could ask myself the hard questions without the pressure of having to act immediately on the answers. And more often than not, the insights that made me the most money came during those quiet hours of preparation, not during the frantic moments of market hours. Then comes the work of discipline, and this is where most people fail. This is the work of following through on what your preparation and analysis have told you. It's the work of entering when your system says enter, even when you're scared. It's the work of exiting when your system says exit, even when you're hopeful. And most importantly, it's the work of doing nothing when your system says to wait. This kind of work is entirely internal. Nobody can see you doing it. There's no visible output. You're not producing anything. You're just controlling yourself. You're managing your impulses. You're resisting your urges. And this, my friend, is the hardest work you'll ever do, because the human mind doesn't want to follow systems. It wants to react. It wants to feel smart. It wants to be right every single time. And discipline is the constant battle against those wants. Now, let me tell you about the fourth kind of work, the kind that destroys accounts. It's the work of interference. This is when you start working on your trade after you've entered it. You start second-guessing your analysis. You start looking for reasons to exit early or add more or move your stop. You start checking it compulsively, reading every news item, asking for opinions. You're working so hard, you're so engaged, and you're sabotaging yourself with every minute of it. This interference comes from the same place that all destructive behavior in trading comes from, the inability to accept uncertainty. You can't stand not knowing whether you'll be right. You can't tolerate the discomfort of having money at risk with no way to control the outcome. So you work. You stay busy. You convince yourself that all this activity is productive. But it's not. It's just anxiety wearing the mask of diligence. All it does is increase the probability that you'll interfere with a perfectly good trade. The great traders, and I've known a few, all have this quality in common. They can put on a position and forget about it. Not literally forget, of course. They know it's there. They know what it means. But psychologically, they can set it aside. They can let the market do its work without feeling the need to be involved in every tick, every fluctuation, every moment. This is the ultimate form of discipline in trading. It's not the discipline to follow your rules, though that's important. It's the discipline to trust your rules enough that you don't need to constantly verify them. It's the discipline to believe in your analysis enough that you don't need to reanalyze it every hour. It's the discipline to have confidence in your preparation so that you don't need to keep preparing once the moment of action has passed. And here's the beautiful thing. Once you learn this, once you truly internalize this idea that less effort can produce better results, something shifts in you. The stress decreases. The anxiety diminishes. Trading becomes less exhausting. Not because you're caring less, you still care deeply about your capital and your results, but because you're no longer fighting against yourself at every moment. You start to see the market more clearly because you're not looking at it through the lens of fear and hope every 5 minutes. You start to make better decisions because you're making fewer decisions. You start to keep more of your profits because you're not constantly finding reasons to exit. You start to cut your losses more effectively because you're not averaging down out of stubbornness or pride. In short, you start to become the trader you always had the potential to be, not through more effort, not through more work, but through the wisdom to know when to work and when to wait, through the discipline to tell the difference between productive preparation and destructive interference, through the courage to do nothing when nothing is the right thing to do. This is my message to you today. Hard work built America. Hard work builds buildings and businesses and fortunes in almost every field of human endeavor. But trading is different. Trading is that one strange arena where too much work can be your undoing, where the path to success sometimes means doing less, not more, where your ability to sit still can be more valuable than your ability to act. Learn to work hard at the right things. Preparation, analysis, discipline, patience. Work hard at building systems and following them. Work hard at understanding yourself and controlling your impulses. But once that trade is on, once that position is established, have the wisdom and the courage to step back, to trust your preparation, to let the market decide, to do the hardest work of all, the work of waiting. Because in the end, the market doesn't care how hard you work. It doesn't reward effort. It rewards being right. And sometimes, being right means having the strength to do absolutely nothing while everyone around you is busy working themselves into losses. That's the dark side of hard work in trading. But it's also the light at the end of the tunnel. Because once you understand this, once you accept it, once you learn to channel your efforts into what actually matters, you stop being a victim of your own work ethic. You stop sabotaging yourself with activity. You stop paying the psychological price of constant stress and worry. And you start finally to take from this market what you came here to get, not through heroic effort, not through endless work, but through smart preparation, patient execution, and the rare discipline to leave well enough alone. The market will always be here tomorrow. The opportunities will always return. But your capital, your emotional energy, your mental clarity, those are finite resources. And the greatest traders I've ever known were the ones who learned to conserve them, to deploy them strategically, to work hard only when that work would actually matter. Be one of them. Learn when effort helps and when it hurts, and have the courage to do nothing when nothing is the smartest play you can make. That's how you win this game. Not by outworking everyone else, but by outweighting them. Not by trying harder, but by thinking clearer. Not by staying busy, but by staying disciplined. The choice is yours. You can keep working yourself into exhaustion and losses, or you can learn to work smart, to work when it counts, and to rest when rest is the most profitable thing you can do. I've been on both sides of this choice, and I'm telling you, from experience bought at the price of multiple fortunes, which side leads to success. Now go forth and trade with wisdom, work hard at what matters, and learn the profound power of doing nothing when nothing needs to be done. If this message resonated with you, if you're starting to see how your own work ethic might be sabotaging your trading, then I need you to do something for me. Hit that subscribe button, because these aren't the lessons they teach you in books or courses. These are the lessons you learn only by surviving this market, and I'm giving them to you straight. And if you haven't already, go back and watch my videos on why trading is a waiting game and patience is your real edge, how traders unknowingly sabotage their own success, and the psychological price of trading, success. Each one is a piece of the same puzzle. Each one will show you another angle on what really separates the winners from the losers in this game. Leave a comment below and tell me, what's the hardest part about doing nothing when you're in a trade? What makes you want to interfere? Be honest. Because understanding your own patterns is the first step to breaking them. And if this video helped you, share it with another trader who's grinding themselves into the ground trying to work harder. Sometimes the most valuable thing you can give someone is permission to stop trying so damn hard and start thinking more clearly. The market will be here tomorrow. The question is, will you still have your capital? Will you still have your clarity? Or will you have worked yourself right out of both? Make the choice. Subscribe, watch the other videos, and start building the kind of discipline that actually makes money in this business. I'm Jesse Livermore, and I'll see you in the next one.